and find out what these three trading sessions are going to mean for the markets. Sanjiv, hi, good morning. Last week was, of course, marred by HDFC Bank, but seems like ICICI Bank is going to pick up the flavor for banks.
Yeah, good morning, Aisha. Welcome to the biggest event of Jai Shri Ram, and now looking forward to 26 January. Also, not to forgot to mention the Dow crossing 38,000. The pessimists and the people on the sideline waiting for corrections and talking of overvaluation, all that is on the sideline. The mid cap index hit an all-time high. REC, PFC, NBCC, GAIL, you name the stock, IREDA. Look at the earnings and look at the numbers. So they are expensive, but it's expensive because there is no ownership. I was very flattered by the numbers of Colgate. I think Colgate, and I've been repeatedly telling you from 1800, Colgate is going to be the star for the FMCG. Now you watch Nestle's numbers. So I still think that now there are enough wheels to add to new highs. And I would be more bullish on the bank Nifty, given that the PSU pack on earnings along with ICICI have been stellar. So I think the underperformance of HDFC now gets neutralized. By the way, almost 25,000 crore worth of HDFC stock has been sold. Now, whether it's a discount of 10% or no, who knows that you could see an expiry closer to 1600 on HDFC itself, given that most of the carnage is in. So extremely positive for the next 3 days and beyond. But let's watch for 21,850 being crossed and all the bears coming for covering.
Absolutely.
The entertainment, after all the flip-flop, it looks like there's been a crash landing. The merger has been completely called off, and all the brokerages are warning that there's going to be nothing short of a free fall now for Zee Entertainment valuations. And question is, what's going to happen now?
Yeah, unfortunately, this was coming and you had to be geared up. But let me tell you, 61% of Z is owned by mutual funds and LIC. So how can you have the largest shareholders do nothing? And now there are question marks on those independent shareholders, board of directors who did nothing for 3 years. So I think the Goenkas will be shunted out, and that would be the best case of consumer investor activism which you are seeing. I am very, very optimistic that there will be as a disclosure, you are aware, Mukesh Ambani had put in a bid only to be second to Sony. And I think now there will be another buyer. The underlying business remains very robust. Yes, the uncanny thing of Sony calling it off, we'll see a lot of court battles, but we'll wait for that to be played out.
Your dog who's disturbing us right now, Sanjeev?
Huh?
I said, is that a dog nearby you?
Yeah, that's my third son called Shiro. So he's playing little spoil sport. Sorry for that.
No worries at all. Maybe we'll get more TRPs if we have him on air. But, that aside, I wanted to get your thoughts on the railway stocks, because we were just discussing this a short while ago and looking at the mammoth move as well that we've witnessed in some of these rail stocks. Is it advisable to jump on, or have you missed the train completely?
Aman, that's what I'm saying. The stock market is a glass half full, half empty. Don't look at the HDFC Bank of the world. Look at the broader market. NBCC, the rail stocks, REC, PFC, the list of PSUs hitting new highs is endless. Union Bank numbers, IREDA numbers. That is where the money is being made. And unfortunately, that class was missing for mutual funds. And some of the, large PMS who said PSUs are untouchable, and so are technology stock. Look at the earnings from Persistent. Look at the earnings from Coforge. Not to forget SW Solar. It's been hitting 3 circuits, and for the right reason. As you just pointed out, 1 crore solar panels to be installed. SW Solar is the lowest cost producer, MEP player, mechanical engineering and plumbing, and it will be laughing its way. So I still think there is a huge under ownership of PSUs that will be gather steam. As a disclosure, we have IRCON and IRFC both in our portfolios, but please do not chase them. But replace some of your real estate stocks with large cap banks. I think ICICI Bank is going to see a 30% jump in market cap over the next 3 to 6 months.
Well, you said real estate. Curious to know, Sanjeev, any fresh ideas within the realty pack or any beneficiaries?
No, like I've been warning you, stay away from real estate. I think they're fully priced. I would rather go on a quasi play. So I've been saying banks, and I've been saying, I think small banks which trade less than one time price to book, particularly in the space of, part PSU, part private, like a Dhanlaxmi Bank, which we've identified as a disclosure that is in our personal portfolio in our client. These could be stocks which can double. They have no large ownership. They are less than 1.5, 2 times in ownership by any percentage, and they have huge outflow as far as the business is going. Whether it's gold loan, agri loan, it's one of the best banks from Kerala. And the similar case was with RBL when there was no promoter more than 2%, closer to 100 rupees, and you had the Mahindra's buys. So I am very optimistic on that. I was very impressed with Colgate earnings. Indus Tower is my dark horse, which I've been telling you. That will be a big outperformer. Look for targets closer to 300 on Indus Tower.
Okay, thanks so much for taking time out and joining in. Let's in fact connect